Oh, hello there. We are on, I believe, our fourth series in our live video series called DIY Bookkeeping. The reason why, and I will mention this every time for anyone that is new, the reason why I am doing this is to help all of those that may not be able to afford a bookkeeper, especially with COVID. And I don't want to see them make all of the mistakes that I may have, or not may have, I have made. And I just really want to see them succeed. And I should let you know that what I am providing you right now is strictly for management purposes. It is strictly so that you can see what your business is doing. I am not asking you to do any of this so that you can do anything advanced, so that you can take everything to your bank and try to get a $1 million loan in order to expand. Nothing like that. I do ask that with the information that I am providing you, that when you get started, go on ahead and at least look me up. Look me up and ask me, hey, Lisa, can you do me a favor and look at my chart of accounts? This is what I have come up with. Can you tell me if you found anything wrong? I would be more than happy to do that. And that would be a part of this. And if there is something that you really want to do outside of knowing what your business is doing, how much you're making, how much you're spending, then I would highly recommend seeking out a bookkeeper. If it's me, wonderful. If not, then I just ask that you find someone that is more than willing to help and get you where you need to be. So with that said, every single video that we do, we are going to do a little bit of a review first before we get into the meat and potatoes of the video. So I just want to make sure that you remember what it is that we discussed the previous week. So let me share my screen. Okay, so we are back in the chart of accounts on QuickBooks. And if you remember correctly, we just went through what some of the basics are to show you what the chart of accounts looks like. This is your hub. This is the hub of what everything entails in your accounting system. In other words, without this, everything else is going to fail, guaranteed. So you want to make sure that this is perfect. You don't want any errors to be in this. This is the very first step and the number one important step to having a successful bookkeeping system. So we've got your bank accounts. And again, you can have as many as you need. We've got your accounts receivable, which is what is owed to you by customers. We've got your current assets, your inventory, your prepaid expenses. We've got your fixed assets, the things that you own, the big things, your truck, your building, your land. We've got your accounts payable, which is what you owe others. We've got your credit cards. And again, these are not in with the liabilities. This is something a little bit different. It is a liability. But remember, the reason why QuickBooks Online categorizes this as a credit card and not as an other current liability is because you can pay it differently than anything else. We've got your other current liabilities, your sales tax payable, your personal loans. We'll go over that again. Your personal loan is not a personal loan that you get from a bank. Hi, I do see that I've got one person viewing. If you could please click on your screen. There should be, I think 3 dots there on the video, and you need to accept StreamYard so that you can make some comments. I'd love for you to introduce yourself. Again, the loan payable for the personal loans is not what you would get from a bank. It is what you as a business owner may give an employee because they had a tire blowout, they were in an accident or whatever, and they didn't have the money to fix it, and you wanted to help. That would be the personal loan. Then you've got your long-term liabilities, your notes payable, like the ones that you would get from a bank. It would be a car loan, it would be a mortgage, things like that. We've got your equity accounts, which is what the money that you owe. So this is the business. We've got all of your income. That's pretty self-explanatory. The only thing I will say about that, again, is that it also includes fees as well as discounts. Your cost of goods sold, which is the money that it's costing you to build the product. If you have a product, if you have something like a construction company, it's going to be the amount of money that you spent in order to work on that client, in order to build that house, in order to lay that foundation, whatever it is. And then all of your expenses. The expenses, of course, is what it is costing you to run your business. All of these things, it's a little bit different. Your other income could be your interest earned. Other expense would be the interest that you have spent. So the interest earned would be on a bank account or savings account. Interest spent would be credit card interest, loan interest, things like that. But we've also got depreciation, other advanced things that we'll get into later. Okay, so we've spent a few minutes going over this. Now, let's get into the meat and potatoes, as I like to call it, the actual stages of bookkeeping. We're taking this little by little. I have strategically placed every single one of these live videos so that the next one may go into, this one may go into the next one. This one's not going to be more advanced than what the next one is. So they always lead up to something else. I don't want to start you off on something advanced and then end up with something basic, because I'm going to set you up for failure by doing that. So we're going to go over the different stages of bookkeeping. This is elementary when it comes to bookkeeping, but you need to know it, because the reason why you're here is because you don't know anything about bookkeeping. So let's get started, shall we? Okay, so we've got our different stages of bookkeeping. Okay. So there are 3 basic steps. And if you go onto Google, I guarantee you're going to find a heck of a lot more steps. They're going to be a lot more detailed, but they're also going to be a lot more advanced. These are basic. These are the things that you need to know. These are the things that you need to understand, because I'm not talking to CPAs. I'm not talking to people that are trying to get their degrees in college right now. I'm talking to people that may not know the first thing about bookkeeping. I'm talking with people that are trying to run their businesses but don't have time. They're out there trying to make money. They're out there doing what they do best. They're out there doing what they love. They don't want to come home. They don't want to have to sit in front of their computer for who knows how long doing their bookkeeping, especially when they don't know how to do it. But I'm hoping that for you right now, this is a means to an end. And once all of this lockdown stuff ends and you're able to gain new clients, then I'm hoping that you'll simply be too busy and you'll be looking for a bookkeeper. And the bookkeeper will be able to provide you with more than what you can provide yourself. Okay, so the 3 basic steps of bookkeeping. So number 1 is collection. Number 2 is processing. And the final is reporting. Now, we're going to break these down. Collection. What is collection? The definition of collection is to bring or gather information together. Pretty self-explanatory. This collection is the most basic of all accounting or bookkeeping stages. Without the collection stage, you can't do anything. We collect information from other sources in order to form a picture so that we can have everything readily available for entry. And let me explain to you what that means. Before you can enter anything, you must be sure you have everything you need. The best thing to do is to write and, not or, and highlight certain pieces of information you have on the document in front of you. You want to ensure you don't miss anything. You should be writing down the classification or the account, like what's in the chart of accounts. Those are your accounts. Those are account codes, classification codes. You want to write down your classification code that you have in your chart of accounts that your information belongs to. For instance, you received a bill from a vendor and they're charging you $100 for office supplies. Let's just say it's Staples. Well, you're going to take that bill and now you're going to do what I'm telling you to do with that. When you're highlighting an invoice, for example, make sure the things that you're highlighting is the vendor or customer name, depending on what you're working on, the invoice number, the dates, which is going to be the invoice date and the due date, and the total due. There is another piece of information that is not on here because not everybody has it, and that is going to be your net terms. In other words, everybody wants to get paid by a certain time. So when you're looking at a bill, you'll notice that there's something called bill. It just says typically terms, and it will say usually net 30. Other times it'll say net 10, due upon receipt. Here's a fancy one for you. Net 30, but it'll say net 30, 2%. That means it's due in 30 days, but if you pay it in advance, and they'll usually give you the date, the amount of days that you have. Let's say net 30, 2%, 10. It's due in 30 days, but if you pay within 10 days, we'll give you a 2% discount. Those are the net terms. You also want to highlight those. The things that you should be collecting are bills from your vendors, checks that have been written, receipts, credit card and bank statements, and payroll. And payroll is a whole different monster. We'll get into that much later. We're not going to worry about that right now. And I've got an example for you on the next slide. This is an example invoice. You will see I have circled everything that you should be highlighting. So you're going to highlight the name of the company. Typically, they will have an address. This one does not. You would also highlight the address and make sure that nothing has changed. you want to highlight the issue date. That would be the date of your invoice. Your due date, you'll notice there are no net terms on this, so they haven't been highlighted. And your total due that says pay 65, I don't know if that's euros or what it is. I can never remember. Net terms, discount 0%. So there you go. It does not tell you whether it's due in 30 days, whether it's due in 10, or if it's due upon receipt, but it does tell you that there is no discount. Now you'll see in red, cost of goods sold. I put that down to show you that this is something that you would have to write down. I looked at the faux leather loafers and just assumed that this was a purchase that somebody had made for their store. So this would be a cost of goods sold. It would be like an inventory item. Maybe they needed the loafers to complete a costume. Who knows? But this is what you need to do every single time, and at least until you get used to everything. But I would highly recommend always doing this. And this is the very first step. You never want to skip it because you will miss things. I guarantee it. And I say that because I know personally. Okay, step 2, processing. The definition of processing is a series of actions or steps taken in order to achieve a particular end. We process the information from what you have collected in the previous slides, excuse me, in order to form a picture, to have everything readily available for entry. Make sure you double check all the documents to ensure that you have all of the information written and highlighted, what we were just talking about, on each document so you don't miss anything. The information you've collected then gets entered into an accounting system like QuickBooks, and each piece of information, the invoice, bill, check, etc., they all paint a picture. You're entering everything in the system to ensure that you have accurate reporting, which is the final step, if you remember. And let me give you an example of my slides. I know I do. Okay, so this is an example. This is QuickBooks Online. And you'll see that they took a bill, and these are all of the things that have been highlighted. So they have entered the name of the vendor, and they should already have in QuickBooks programmed what their address is. But remember what I said, you always want to make sure that you highlight the address so that you can make sure there aren't any changes, because sometimes the address on the invoice or on the bill will be different than what their remit to address is. So you want to keep that in mind as well. Your terms, that's what we were talking about. Your due upon receipt, net 30, net 10, whatever it is. Your bill date is going to be the date of issue, the date that they made the bill and sent it, and your due date. If you have net terms that are already in here, it will automatically calculate the due date. Otherwise, if you don't have anything in there, it will automatically default to net 30. So keep that in mind. Your bill number, that is your invoice number. So you would want to put that in there. And then your item details. So typically this is going to be more for billing, not invoicing. And well, when I say when you receive a bill, I mean it's from a vendor. When you send out a bill, then that's for your accounts receivable. You're sending those to customers. So technically what you are receiving is an invoice, but what you're doing, sending out, is a bill. You're doing billing. So this would be more so in billing for customers. because they are itemizing every single thing. As you can see on the bottom right, it actually says customer. In a vendor invoice, what it's going to show is basically what account. What account is this being scheduled to? Is it going to go to office supplies or cost of goods sold, fuel, whatever it is? And then you just break it down that way. This, you're actually telling them, okay, we're billing them this. So I'm sorry. I kind of gave you the wrong example, but I tried. I'm sorry. Okay, and the final step is reporting. And the definition of reporting is to give a written account of something that you've observed, heard, done, or investigated. Technically, everything that you have done, you have investigated it all. Each month, you need something called a financial report. We'll dive into these a little bit later. A financial report, and we're just touching base on this, a financial report is a summarized record of everything you've earned, spent, own, and owe. The reason it is so important to categorize and enter everything correctly into your accounting system is because of the reporting. Some examples of why you or someone else need these reports. We've got business owners. They need them to make business decisions. Board members of nonprofits, partners, and shareholders, they all need them to know the health of their business. And reports make it easier on your tax preparer to prepare your taxes. And there are other reasons. There's loans and things like that. The IRS may not, if you're a nonprofit, the IRS may actually want to see specific reports to know that you are actually a nonprofit. And we've got our example in QuickBooks. So let me pull that up for you here. Here we go. Okay. Okay, so we're going to go to your reports. And yes, we've got a couple of them, but for today's sake, we're just going to go to this. And I'm going to go to all dates because this example report is exactly the same. So this is one of your reports. You'll see that it gives you a summarized listing of every single thing that you have spent and that you have made. This is called a profit and loss report, also known as a net income report. And it's telling us, yep, that is how much revenue I had. These are all of the discounts that I gave. That's why I said that is a revenue account. And then we've got all of our landscape services. I'm not quite sure why they put that in the landscape services and not down here, but this is a sample company, so I'm not worried about it. These are your cost of goods sold. And this is why I said it is so important to put your materials up here and not down here. Because a bank is going to look at this and they're going to say, well, wait a minute, you made this amount of money, but you're out there spending tens of thousands of dollars on expenses. So they frown highly on that. These are also cost of goods sold. So we've got your materials and then we've got your labor. These are job subcontractors. These are also cost of goods sold. So this particular company offers landscaping They've got their labor, but they've also got their pest control. And then we've got an undesignated one here that is just cost of goods sold. And then we've got all of your expenses, your advertising, your auto expenses, which would be fuel, any maintenance on your vehicle, could be tolls, things like that. Equipment rental, I'm kind of surprised that they put that here and not up here in the cost of goods sold. We've got more job materials that they did not classify anywhere else. We've got equipment repairs. So just like a vehicle repair, if you've got equipment that is running your business, could be a jackhammer, who knows, but you needed to repair it, that's where you would put it. Meals and entertainment, office expenses, rent. You can have multiple different types of rent. You typically have a long list of utilities. I never, ever, ever recommend that you have anything under miscellaneous. You shouldn't even have that account. So if you can't account for it, then ask. There is an Ask My Accountant category that QuickBooks automatically provides. Use it, because then you know exactly what needs to be asked. You're never having to look for it. And so what this report shows is, again, everything you made, everything you spent. So it subtracts everything you spent from everything you made and gives you your net income or your net loss. And then this actually plugs this number into another report, and I'll show you what that is at a later date. There are several reports for financial reporting. So, but I wanted to give you just a small taste of what one of the reports are. So that is it for tonight. I hope that I was able to bring some help to you, and I hope that your takeaway was good, and that you're able to apply what you learned. So again, if you have any questions at all, setting anything up, setting up a chart of accounts, if you have any questions with if you should have something, a certain account in there, or how detailed it should be, please feel free to send me a message, and I am more than happy to help you. So tune in next Wednesday, again at 7 p.m. Central Time. We will be discussing another topic, and let me actually get that for you. So the next topic is going to be what the differences are between a CPA, an accountant, and a bookkeeper. And if I have time, I'll go into when a good time is to hire a CPA. So tune in next Wednesday at 7 p.m. Central Time. And I will see you then. And have a great week and a great evening. Good night.